Today we're looking at trade setups on Google and the currency pair New Zealand dollar Swiss franc. Stick around. Hi, this is Tim from TradingStrategyGuides.com. Stay around till the end of the video and I'll share a bit more about my Comcash Alerts app that gives you a place to chat with me and see more of my trade setups. Today I'm going to show you a trading range on Google and a bull flag on the New Zealand dollar or Swiss franc currency pair. But first, let's take a look at the active trades. Later on, this week's trading maxim. Happy Monday. I hope you had a nice Easter weekend for those of you who may celebrate that holiday. Remember, the market may be a bit slow and whippy for a few days due to the holiday weekend blues. So let's catch up on the active trades. Surprise! I told you I was going to give you a little bit of a surprise today, right? Our video editor said that he wanted me to try out dark charts and see what he could do with them, so we'll see how this works. You guys tell me down in the comments what you think of the black charts. This is just temporary for now, and we'll see what you guys think. In the meantime, the US dollar Swissy is making a bit of a consolidation right here for a few days. I've followed the stops up to 93.46. Locking in 294. I'm going to hold it right here until this makes a new high above this 94.80 area right here. I closed the Aussie Kiwi at 108.27 for a 0.7% account loss because Friday looked like it might close back inside the triangle right here, just ahead of my broker's closing time, which is an hour before the market close. Looks like it came within a few points of the stop loss right here, but you may not have stopped out depending on what the spread was at the time. So if you're still in this, it's still looking a little bearish, but as of the Sunday night recording, it's still above the triangle. PG&E closed back inside the bull flag right here, so I closed it for minus 1.1% account loss at 11.51. So the volume is still continuing to decline, so we may be able to make something like a trading range or an ascending triangle out of this. I'll let you know, but for right now, I'm done with PCG. The Euro Swedish krona popped right up here and hit our first target last Tuesday. I closed half for profit, set the stop to break even on the remainder. The PSAR pulled right up above the break even stop, and I've started trailing the stops here, currently at 10, 20, 80, locking in 113 pips. Don't get too excited about 113 pips since these pips are about equivalent to 11-ish pips on the majors. The Bitcoin trade triggered a buy right here on the day of last week's video. It pushed up a bit and now it's just kind of going sideways. I'm in this at 57,723 with a target of 61,307.93, stop loss of 52,345.61. And lastly, Monster triggered a buy on Friday, 322. I missed that entry on Friday. I mentioned this in last week's video. I did take it on Monday morning and it dropped down here and touched the bull flag, which is a good sign, particularly since it bounced and it's pushing back up now. So we'll see how it goes this week. And that's it for the active trades. Let's take a look at today's trade picks. Today we're looking at a trading range on Alphabet Inc., better known as Google. It trades on NASDAQ as GOOGL. Just to be sure everyone's with us on this, a trading range is a consolidation with a strong support level, like this one at 1990, and a strong resistance level like this one up at 2145. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of a trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range or ATR. And here's the trade plan. We will buy a daily candle close above the range or above 2145, or we will sell a daily candle close below the range or below 1990. On the breaking candle to enter a full-size position, we want to see this volume bar reach this volume average. If it doesn't quite reach the average but does reach 75% of the average volume, I'll open a half size position to reduce risk. You can make that calculation by taking this volume number, dividing it by this volume average. You should get at least 0.75 on your calculator. If you don't get that number, I suggest you stand aside on the trade. The stop loss is 1.5 times the ATR. First target is 1 times the ATR. So on the breaking candle, let's say for grins and giggles, this thing breaks to the upside here and it's about to close. Just ahead of the close, say 15 minutes or 30 minutes before, set up your buy order. Look at your ATR right here, multiply that by 1.5, measure that distance down here for your stop loss, measure 1 ATR up here for your first target. Of course, it's just the opposite if it goes to the downside. Remember that if a candle closes back inside the range after you've entered the trade, you close that trade, take a loss right then, and you don't wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit, set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I'll only risk about 2% of my account on each trade, and that's today's setup on Google. For the next setup today, we'll look at a bull flag on the New Zealand dollar Swiss franc currency pair, affectionately known as the Kiwi Swissy. A bull flag consists of an incoming uptrend like this one here, and then a descending parallel price channel like this. A bull flag is a bullish consolidation, so I will only take a buy trigger on this. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the ATR, as I mentioned earlier. Now here's the trade plan. We'll buy a daily candle close above the bull flag. Now, I'm not going to bore you with that whole spiel again. The management details are always the same. If there's at least average volume, enter a full-size position. If there's only 75% volume, enter half-size position. Otherwise, stand aside. Stop loss is 1.5 times the ATR. The first target is 1 ATR. If you get a candle close back in the flag after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. 2% risk on this trade. And that's today's setup on the Kiwi Swissy. Okay guys, that's how I manage these trades. You do you, okay? Make sure you understand what you're comfortable with. Trade it that way. And to help me keep a handle on the psychological side of trading, I use my trading maxims. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools you need to maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 81. You can't beat the person who never gives up. And that quote comes from the great Babe Ruth. And what more can you say? Don't ever give up. Take a break, but always go back and hit it hard. Remember our Google trade plan for today. We're going to buy a daily candle close above the range or above 21.45, or we'll sell a daily candle close below the range or below 19.90. And our Australian dollar Swiss franc trade plan for today, we're going to buy a daily candle close above the bull flag. For both trades, take a full-size position if you've got average volume or better, half size if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR, and your first target is 1 ATR. Now, earlier I mentioned the Comcash Alerts app. If you like making cash and you like to be calm about it, then this is the app for you. I share all my calm personal trades on the app, so you can trade them right beside me. That includes the trade picks from my Monday videos like this one and all the other setups I do all week long. You get to see my modifications and additions that happen during the week as well. Now, trading is kind of a fluid activity. Plans change. Someone once said that a battle plan rarely lasts beyond first contact with the enemy, or some such thing. Anyway, sometimes the plans I share in my videos require modification on the fly. I don't change my rules, at least not lightly, but the market will do wacky, unexpected things, and I used to worry about sharing that information with you guys. Some of you have been around the block a few times, but there are some of you that need a bit more of a helping hand, so I love to be able to share modifications during the week. Check it out. The app is available for iPhone, Android, and desktop browser. If you think you might be interested in being a Comcasher, you can click the link in the description for more details. And that is it for today's video. Come back Wednesday for the next installment of the Trading Education Series. This time we'll be looking at one more round of trade examples, and be here Friday for my strategy of the week and next Monday for my trade pick. My videos come out at 3 p.m. New York time, barring unforeseen circumstances. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. You guys have a great week, and I'll see you on Wednesday.